Good morning. Oh, pardon me. Sorry. Good morning. Good morning. Good morning. Welcome to today's morning blast with myself and the magnificent with a capital M, Michael Brown. As usual, we will be giving a review of yesterday, a preview of today, and hopefully add some value, put a smile on your face. Also, it is fucking Friday. We've made it through the week. But before we get started, let's get the legals out the way. So as usual, nothing discussed on this Spaces session constitute trading or investment advice or refers any kind of endorsement by PIQ, myself, Ryan Paisley, and of course, Mr. Michael Brown. How are you, my dear friend?
Good morning, Ryan. Good morning, everyone. Very happy Friday. Not too bad at all, although it would be nice if the sun put in an appearance. Very grey outside thus far
Yeah,
this morning.
yeah, I'm not used to it. It's doing my tan no help whatsoever. But I'll be away again soon, so who cares?
Well, exactly. Zach and I will be here to hold the fort down, I'm sure.
That's not a bad shout, actually. Maybe if Zach wants to put his name forward whilst, or if end up going to Vegas. But yeah,
Well, he's
yeah.
he's been volunteered now. He doesn't get a choice.
Well, there you go. There you go. What's been occurring, my dear friend?
Indeed, yes. Once again, very happy Friday to everyone. It was an interesting day yesterday because 24 hours ago we were sat here talking about how we had a sort of good old-fashioned risk-on vibe across the financial markets. Well, frankly, that fizzled out rather rapidly. The optimism that we saw during the Asia session on Thursday on the back of the Court of International Trade ruling that some of Trump's tariffs were in fact illegal, well, that disappeared very, very quickly indeed. And I think there's two primary reasons for that. As the dust settled on the ruling and we all dug out our legal scholarly books on the United States Constitution, it became increasingly clear that actually there are numerous other ways by which the Trump administration can indeed impose the tariffs that they want to impose. And most of these ways don't actually need congressional involvement. So very much a case of, while the means may be somewhat different, the ends in terms of tariffs being imposed on sectors and on countries across the globe remain pretty much unchanged. We then had further news late in the day that the Trump administration, as had been fully expected, planning to and actually lodging their appeal against the initial ruling. And in fact, we heard at around about 8 o'clock last night that the Court of Appeals in the United States have actually temporarily halted the ruling against those Trump tariffs, and that while the appeals process takes place, the tariffs that were previously imposed under the IEEPA, so the reciprocal tariffs, the fentanyl tariffs, etc., they are reinstated during the appeals process. Now, it's important to stress that that is not the courts making any sort of judgment on how the appeal may go. It's more of a sort of technical measure of saying, okay, as you were, while we investigate, while we
Yeah,
deliberate, while we hear your arguments, and then we will come to a
it,
final decision. But
kind of
nevertheless, the
a like a technical innocent until proven guilty.
Absolutely that. And the sort of nub of the situation is that we are this morning essentially exactly where we were this time 2 days ago. So all fun and games in a very choppy market in between, but we haven't actually made any progress, to be completely honest with you. In terms of those markets, as I said, the positivity fizzling out as the day progressed. The S&P 500 closing with a gain of about 0.4%. The Nasdaq adding a more modest 0.2%. Both of those were up by around 1.5–2% on an intraday basis. So quite a chunky pairing of that advance as the day progressed. Treasuries gaining ground across the curve, with the 2-year yield falling by 5 basis points, the 10 and 30-year yields falling by about 4 basis points apiece. Those gains would have been helped along by what was an impressive 7-year auction, actually, stopping through the when issued by 2.2 basis points. And that, of course, comes after well-received 2 and 5-year supply earlier on in the week. The dollar also giving up most of its early gains yesterday with the... you all right there?
Yeah, I was fiddling with something and it just broke. Don't worry,
Oh,
carry on.
oh God. Ryan's ADHD is coming out again, everybody.
Yeah,
The dollar giving up most of its early gains, the dollar index falling below the 100 handle on an intraday basis yesterday. We have seen a pairing of some of those losses during the Asia session this morning. Cable surrendering the 135 figure, the euro backing away for a test of the 114 mark. And also, as sentiment did soften, we saw gold find some demand as well, with the yellow metal shining a little bit more, gaining about 1% yesterday and trading north of $3,300 an ounce. In terms of other catalysts and bits and bobs to bear in mind from yesterday, we did have a few economic data releases out of the United States. GDP was revised higher to minus 0.2% on an annualized quarter-on-quarter basis in the first quarter. That compares to the first estimate of minus 0.3%. Of course, as we've discussed at some length, this contraction driven primarily by a surge in imports as people tried to front-run the tariffs that Trump imposed at the start of April. So that is very much in line with expectations. We also had the latest jobless claims data out of the States last week, both initial and continuing claims coming in above expectations. Initial claims at 240,000 in the week to the 24th of May, up from a prior 227. Continuing claims, meanwhile, in the week to the 17th of May, which of course coincides with the non-farm payroll survey week, they rose to 1.919 million, up from a prior 1.903 million, and actually pretty much equaling, or if not slightly above, the cycle highs that we saw in March. So perhaps a little bit of a concerning sign. The implication of that being, if continuing claims are rising, it generally leads to, us to believe that it is taking longer for those people who are losing their jobs to come back into employment, which could potentially be taken as a sign of businesses in the United States beginning to reassess and slow their hiring plans amid the huge degree of economic uncertainty that we continue to see. Speaking of which, and speaking of policy, which we alluded to earlier on, there was a meeting of minds in the Oval Office yesterday with Fed Chair Jerome Powell meeting President Trump at the White House for what I believe is their first meeting since Trump, came back into office at the start of January. According to the Fed's readout of this meeting, Powell and Trump, discussed growth, employment and inflation, but did not discuss expectations for monetary policy, with the Fed chair stressing that the policy path will depend on incoming economic data and how the economic outlook evolves, and that the Fed will set policy solely based on an objective analysis of the economy. Somewhat unsurprisingly, the readout from the White House differed from that, with White House Press Secretary Caroline Leavitt saying at a press briefing that Trump told Powell, and I quote, "It is a mistake not to lower rates." Old to be a fly on the wall in that meeting, because I would imagine that Jerome Powell absolutely ran rings around him, to be completely honest. Sticking with the political situation in the United States, there are a few senators writing a letter. This is one for the chip-focused folk out there, although Tom Talks Cars isn't here. Senators Warren and Banks, they've been moaning about NVIDIA planning to build a factory in China. This is according to the Wall Street Journal, with the senators saying that NVIDIA building this facility in China potentially raises national security concerns. So one to watch there. Of course, NVIDIA, they reported earnings after the close on Wednesday, which, once we got the right figures, were relatively well received, although even gains in NVIDIA fizzled out a bit yesterday. They closed up about 3% or so, having been as much as 6% higher after the report. Turning to Europe, we had news yesterday via the FT citing sources that Germany, they are reportedly eyeing a 10% digital services tax on global tech giants such as Meta and Google. Absolutely abysmal timing from the Germans, this one, when you've got the US running around looking at non-tariff barriers and how their firms are supposedly being persecuted overseas. Probably the one thing you don't want to be doing is demonstrating that you are implementing non-tariff barriers and persecuting those US firms who are operating in your country. So I'm not entirely sure what the Germans are thinking with that one.
But just on this, I think this is indicative. Oh, good word for Ryan.
Oh,
that's
very
a long.
Good.
That's a long word for me as well. It's got a couple of syllables in it. I think this is indicative of the fact that the Germans don't really have a functioning government right now. So it feels like they are making slip-ups like this. Yeah, there's still a lot of back and forth within like the political parties and whatnot, and it's politics are very strained at the moment in Germany, even though we've just had an election. And I think this is why you get kind of these own goals, because if there was anyone, anyone sane kind of running the shop at the moment, they would say, look, this is precisely the wrong time to be doing stuff like this.
Yeah.
So they're playing a very poor hand badly, to put a poker parlance on it.
No, I think you're absolutely spot on that one. And
Oh, stop it.
take a rest after using some long words, and you're probably exhausted now. Uh, moving on from that to one of Ryan's specialist subjects, oil. He used to trade oil, in case he hasn't mentioned. OPEC Plus are set to hike output at their meeting on Saturday. This is according to Interfax, citing Kazakhstan sources. This is very much in line with prior expectations. Of course, the whole OPEC Plus thing is basically falling apart at this point.
Yeah.
The market consensus is that they will unveil another 411,000 barrel per day output hike for July, with the full 2.2 million barrel per day voluntary, quote unquote, output cuts set to be unwound by, I believe, the end of October, at least if the Saudis have their way. Moving on from that, overnight we have had some figures out of Japan, Ryan's favourite economic data release, the Tokyo
Yes.
CPI number, coming in bang in line with expectations at 3.4%, down from a prior 3.5%, although some of the core metrics were a little bit firmer. And last, but by no means least from me this morning, or at least for the time being, news in the airline space yesterday. United and JetBlue, two of the big five US airlines, they have signed a partnership where customers are going to be able to earn and use miles between the two airlines, and they will offer booking of each other's flights on each other's websites and apps. So it seems like things could be taking off for those two.
Oh, God. Thank you. Oh, yeah. The thing is, though, you've set the bar so high that when you do basic punnage like this, it really does lower the bar. Which I welcome, because it means my puns kind of feel a bit better. But yeah, thanks for that. One thing I will flag, going back to the 7-year auction that went very well. Two things of note. One, obviously, yeah, the 7-year, it's not as glamorous as the 5s, the 10s, the 30s, or even the 2s. But it was a very good auction. But did anyone really talk about it? No. Yet we have a pretty shocking 20-year auction, which we know is the ginger stepchild of the Treasury curve, that no one really wants anyway. And you're literally seeing 20 post threads on Twitter saying about how this indicates like the end of the world, for economic world. I just think it's a great example of how doom sells on social media more so than good news. And again, I think it's just one thing to be aware of, because it's not all doom out there. There are glimmers of hope, and I think we do need to focus on those occasionally. But anyway, regardless of that, moving on, to some overnight news headlines via the overnight news roundup that we put out courtesy of the awesome Zach. So I'll ignore some of the ones that Michael covered, but in trade,
I
the
thought you were going
White
to say I'll
House.
ignore Zach for a second then. That was a
Never,
bit
never.
harsh.
Never. He's the boy wonder. Starting off with some trade headlines. Obviously, we know about the court blocking Trump's Liberation Day tariffs. The White House is eyeing Section 122 to impose 15% tariffs for 150 days. This is a rarely used trade act provision, could buy Trump time to craft tailored tariffs for major trading partners. And again, I think that's the key thing. It's the tailored bit that people want as well, the judges want to see, rather than the blanket tariffs. Trump has obviously slammed the trade court ruling is horrible. Demands swift Supreme Court reversal. The president's fiery Truth Social post signals defiance, vowing to fight the decision threatening his trade agenda. US-China trade talks stall, but Besant eyes Trump-Xi call to break impasse. Stagnant negotiations may require direct leader-level intervention to revive tariff reduction efforts. To be fair, I think they've stalled because the Chinese are going, well, look, you don't even know what you can do yet, so we might as well
Bloody
back
hell.
off. What?
Well, no, sorry. I just dug into Trump's Truth Social account
Oh,
because I was looking for that post that you mentioned, and I didn't realise it was 15,000 words long.
yeah, it's very much like a Bill
Jesus.
Ackman post. That was the vibe I got from it. Japan's Akazawa heads to Washington for Friday's trade talks with Besant. Japan's push for tariff relief, maintaining good faith negotiations despite US court ruling. UK seeks faster US trade pact to lock in tariff cuts. Next week's talks between the UK and US aim to expedite relief for UK car makers and the steel industry. I'll be honest, I can't see how US is going to make concessions for for UK steel when they're trying to save their own steel industry. It's a very odd one. I'm not sure that the UK government are playing the right cards there, but it'd be no surprise to see them
That's,
balls it up.
that's all right. Rachel's in control. Don't worry.
Oh, well, speaking of that, it's not actually on my list of headlines, but now you've said it, I'm going to bring it up. So yesterday in the papers, we saw that in the UK, capital gains tax receipts fell by 10% as wealthy Britons quit Britain, the wealthy quit Britain, should I say? Something that we all saw coming a mile off. When they hiked national capital gains and inheritance tax and all stuff like that, and yet the OBR, the Treasury, or whoever, Rachel Reeves, didn't see it coming. Thought it would lead to higher receipts. So yeah, another own goal by the UK government there.
Morons.
More absolute. I think you're being very polite there, my dear friend. Costco
Well,
dodges tariffs by.
it's a family program, right?
Well, yeah, of course, of course. Costco dodges tariffs by shifting sourcing, pulling orders forward. Strategic moves lower cost, shielding consumers from price hikes amid trade volatility. China to resume Japanese seafood imports, easing 2-year ban. I believe this is the ban that came about because of the Fukushima water release, but it doesn't mention it in the headline, but I'm pretty sure that's what it is. This would obviously signal a diplomatic fall, boosting Japan's fishing industry amid trade tensions. Again, you could argue that this is another sign of what's happening in the US is pushing what were very strong enemies in the APAC region to become slightly friendlier. In macro news, Fed's daily resolute on 2% inflation, eyes 2-year rate cuts eyes 2 rate cuts this year. Despite tariff uncertainties, the Fed remains focused on taming inflation with cautious rate adjustments, according to her. Fed's Logan, he urges prolonged high rates to gauge Trump's policy impact. Trade tax regulatory shifts could sway inflation or jobs, necessitating a wait-and-see approach, according to Logan. The House GOP tax package swells to $4 trillion. We had this mainly yesterday with SALT deduction expansion. You've mentioned the Tokyo core inflation, so I'll move that. It is at its 2-year high. The reason I like it, for those that aren't aware, is because it is one of the true leading indicators, because obviously Japan is basically Tokyo, let's be honest, and it sometimes comes out a good full month in advance of the Japan countrywide inflation number. So it's a really good one to watch if you have got an eye on Japanese inflation. Global funds pile into Japanese stocks amid tariff turmoil. 8 weeks of net buying, the longest since 2023, reflect confidence in Japan's market resilience. Bank of England's Taylor pushes for rate cuts despite robust UK inflation and growth. Strong economic data fails to deter calls for easing to counter tariff-driven pressures. Sticking
It
with the
is, of
UK,
course.
go on.
I was going to say on Alan Taylor, he did, of course, dissent in favour of a 50 basis point cut at the May meeting.
Yes. Him, and who was the other one? There was another one.
Dingra.
That's it. UK business confidence hits 9-month high under Starmer's leadership. I'm failing to understand how this is being achieved, but okay. The Lloyd's Business Barometer signals optimism despite looming tariff and tax challenges. Stick a pin in that one. China's factory activity likely contracted in May, hit by trade tensions. A Reuters poll suggests manufacturers face headwinds from US and other export market tariffs. Geopolitics. US to revoke Chinese student visas in critical fields. We heard rumours of this yesterday. Policy targets students linked to Communist Party escalating bilateral tensions. Israel fears that Trump may soften Iran nuclear enrichment stance for a deal. Concerns grow that US enthusiasm for a nuclear agreement could compromise regional security. One to keep an eye on, because as we know, Netanyahu's got a bit fiery again, looking for a Israeli strike on Iranian nuclear kind of enrichment facilities. And as we have seen recently, the trend is that Israel are firing first, letting the US know afterwards, rather than what we've seen historically, which is the Israel kind of seek permission from the US to make these strikes. So definitely one to keep an eye on. But again, it's one of these, it's a nothing burger until it's a massive burger. So yeah, do that with what you will. Saudi minister urges Iran to take Trump's nuclear deal offer seriously. The warning highlights a rare chance to avoid conflict with Israel through diplomacy. US to boost arms sales to Taiwan, countering China's military pressure. The enhanced weapons deliveries aim to deter Beijing's growing aggression towards the island. If history's anything to go by, US sending arms to Taiwan normally increases the aggression shown by Beijing. So one to keep an eye on there.
Indeed.
In equities, we've heard from Michael about Nvidia beating Tesla. Austin Robo Taxi, we've heard about that yesterday's show. That should be set for June the 12th. HP shares slide as tariffs force price hikes, China production shift. China's tech giants pivot to homegrown AI chips amid Nvidia curbs. One for our favorite AI company, Pony AI, to keep an eye on, I guess. And mind the gap. Gap shares plummet, facing 100 to 150
Oh,
million
God.
tariff hike. And that's it from me. Back to you in the studio. Oh, actually, before I do, and because in case people tune off before the end of the show, I just wanted to say a good, massive thank you to everyone that has expressed their well wishes and whatnot to my father, who unfortunately had quite a severe heart attack whilst I was away. And to be honest, I'm not really sure how I feel about this, but my family decided to keep it quiet whilst I was away, not to ruin my break. I kind of quite rate it, but at the same time, if anything had gone wrong, I'd been really pissy. But anyway, but yeah, from me to everyone that's kind of given me their well wishes, thank you so much from the bottom of my heart. Myself and my family really do appreciate that. But anyway, back to you in the studio.
No, very well said, mate. And, well, you know this already, but pass on my best wishes
Oh, I
to
will.
your old
Oh,
man as well.
actually,
And
might as well turn this into a PSA. So just for you guide, and I know Michael's in a similar position here. Old men especially can be very, very stubborn when they feel a bit unwell. My dad basically was just suffering from what he thought was indigestion or heartburn for a few days, and it turned out he was having multiple heart attacks. So just one to think about if you have got older relatives, especially stubborn blokes, which we are quite stubborn sometimes. Just make sure they get seen to if that happens to you, because it really is for the best. But anyway, enough of that. Back to you.
yeah, no, very, very important though.
Oh
But
yeah.
anyway, back to markets and the and the day ahead. What do we have to get our teeth into? Well, in about 9 minutes' time, we have a whole host of regional CPI prints out of Germany, and that will be followed up by the nationwide data, which drops at around 1 o'clock this afternoon. CPI expected to have remained unchanged at 2.1% on an annual basis in May. Moving into the North America session this afternoon at 1:30 London time, 8:30 on the East Coast, we have first quarter GDP out of Canada. That is expected at 1.7% on an annualized quarter-on-quarter basis, down for a prior 2.6%. Of course, bear in mind that while we've seen a big boost to GDP elsewhere as a result of the tariff front running, Canada was hit with tariffs much earlier than anywhere else, apart from, of course, Mexico and China. So we are unlikely to see the same boost to the Canadian GDP figures. Also at 1:30 this afternoon, we have the latest PCE inflation data out of the United States, which, as the rules dictate, I must tell you, is the Fed's preferred inflation gauge. Headline PCE is set to be at 2.2% on an annual basis. At least that's what Chair Powell told us a couple of weeks ago, while core PCE, and that is seen falling to 2.5%, down for a prior 2.6%. And this, of course, data for April. During the rest of the US session at 2:45, we have the latest Chicago PMI figures out of the US, this via MNI, of course. The data released 3 minutes early to those lucky folk who subscribe to MNI, and the index expected at 45, up from a prior 44.6. And then quarter of an hour after that, at 3 o'clock this afternoon, London time, we have the final read on consumer sentiment from the University of Michigan. Their index expected at 51.5 compared to the preliminary read of 50.8. Do just bear in mind with this data that the preliminary read, which was the second lowest print ever, that was surveyed about 3 days after the trade truce between the US and China. So I think there is the potential for potentially a chunky revision to the preliminary number, given that the later responses will likely be considerably more optimistic, given the much more conciliatory trade tone that we have seen struck in the second half of the month compared to where we were a couple of weeks ago. In terms of other things to focus on today, the earnings docket is relatively barren, although we do have some central bank speakers, including the ECB's Vujicic, Panetta and Muller, and the Fed's Daily, although she'll be speaking at about 10 o'clock this evening. So I think we'll all either be in the pub or in bed by that point. And of
Yep.
course, the standing reminder must apply that there is, of course, the potential for gapping risk over the weekend, depending on geopolitical developments, trade developments, and of course that OPEC plus meeting that we alluded to earlier on. And last but by no means least, sorry, I've just remembered, President Trump will be speaking a couple of times today At 5:30 this afternoon, London time, he will be giving a press conference with Elon Musk because today is apparently Elon's last day in the federal government. And then at about 10 o'clock this evening, London time, Trump will be giving a rally where he is due to address the US Steel, Nippon Steel merger. He was talking about this last week and it was very ambiguous as to whether he'd actually agreed to it or not. So just want to bear in mind if anyone has any exposures there. And that for this morning and for this week is your lot from me.
Awesome, Mr. Michael Brown. Thank you so much as always, listeners. Myself and Michael really do appreciate you for tuning in. Whatever you're doing today and over the weekend, stay safe, look after each other. Much love, and we'll see you Monday. Goodbye.
Indeed. Bye for now.